We're now joined by David Hurwitz, who is the CEO at Transaction Capital, to weigh in on some of these results. David, thank you very much for your time this evening. The market, as Chantal Marx said there from FNB, is really at sixes and sevens, as it were, when it comes to how the share price has performed due to these results. But let's talk about how the biggest part of Transaction Capital, the taxi financing sector, has actually done. We've seen in the past 2 years or so, COVID-19 has been there, and in your big two markets, Gauteng and KZN, there have been a number of disruptions, including that flooding that happened earlier on in April. How is the taxi industry doing in terms of recovery since those times of COVID-19?
Hi, thanks for having me on the show. Yes, I think if you take a look at all of our businesses, the first two have grown really, really nicely, Newton and WeBuyCars, as you've said. Our taxi business, SA Taxi, really is facing headwinds as the industry faces headwinds. If you just kind of reverse back a few years, or maybe even a little bit further, if you take a look at the last 10 years, the minibus taxi industry has grown structurally. It's positioned to grow. It's very resilient. What we see bus and train continuing to lose ground. The infrastructure gets ruined and does not get replaced. Bus and train move less than 1 million people every day. Minibus taxi moves 15. So it's the dominant form of public transport. It's non-discretionary spend, and for that reason, it's very resilient. However, over the last 2 years, it's been through a very tough time. During COVID, we saw lower commuter movement, which means that there's less volumes in the sector. We then saw very high fuel prices. Toyota continues to increase the price of the minibus taxi, which makes it more expensive to acquire. And all of this has happened over a period where the industry did not pass any fare increases. So traditionally, fuel price increases or interest rate increases or vehicle price increases gets absorbed through the industry passing a better or higher fare. And during COVID, the industry did not pass a fare. There's only been one fare increase this year, which happened in June, which was not sufficient to offset the pressures that the industry is seeing. So the industry is under pressure. We think that it'll take at least another year to recover. And then just to kind of top it all off, we had the floods in April, which closed the Toyota plant. What that did is that disrupted the supply of new Toyota minibuses coming into the sector. As we all know as South Africans, that is the vehicle of choice in the industry. And as we weren't able to get our hands on new vehicles, that obviously stops us from selling the car, financing the car, and insuring the car. So all of this impacted our earnings. We've done a lot to counter it. For example, from an affordability perspective, we've picked better credit quality customers, and we've seen this come through in our credit performance. We've lengthened the term of our loans to make the installments lower. We've shifted more of our customers into what we call a QRT, which is a vehicle that we've repossessed and rebuilt. And that is a cheaper vehicle, but still can do the job, which makes it more affordable for a customer and also allows our customers to access a car while new cars weren't being built. So we've been very entrepreneurial and, have tried to counter some of these headwinds. But all in all, as we guided in April already this year, the taxi earnings were always going to be down.
David, not only have the hard times been there in the taxi industry, but just in general, when it comes to consumers, when you look at the price of fuel going up tremendously in the past 12 months, and interest rates are also going up. But when you look at WeBuyCars in the second-hand car market, where you are really eating into that market share, the price of second-hand vehicles is actually increasing and ballooning. What's the reason behind that?
So I think what we've seen, if you look elsewhere in the world, there's been supply disruption in the supply of new vehicles. In South Africa, that has normalized now. But whilst the supply of new vehicles was disrupted, used vehicle prices raised very high. If you look at the US and the UK, going up by 30 to 40%, and have now actually started to come down as the supply of new cars comes back into the market. This did not really happen in our market. Last year we saw used vehicle prices go up between 8 and 9%. And since about June, July, we've seen that that increase rate start to stabilize off. So we haven't seen these huge increases and subsequent decreases in used vehicle prices. Neither have we seen very steep increases. But what we have seen is that consumer confidence is down. This has not, however, stopped us from growing volumes. We grew our volumes by about 40%, and we've done this as we've taken market share. So if you look at WeBuyCars, we have a very small market share, less than 10% of a very big and resilient sector. We see 11 million cars on South Africa's roads, 1.2 million trade every year, and as I said, we've got a very small market share. We've gained market share through opening up new branches, through doing things like greater brand awareness and greater lead generation online as people sell and buy cars online. And then finally, we've built out a very strong e-commerce channel, and 30% of the cars that we sell are sold online. And all of the cars, almost all of the cars that we buy, the leads are generated through an online lead. So our digital business has really helped us take market share and grow volumes. We're below 10% over the medium term. I'd like to think we can get to 20% or even more.
David Hurwitz is the CEO at Transaction Capital. Thank you very much for your time talking to us there about the state of the taxi financing industry and the second-hand car market, which has seen cars, actually the price of cars when it comes to inflation exceeding our current inflation level at this present moment.